All right, continuing to the upside. Like we said yesterday, didn't even get below the 10. Now we're giving a nice, almost a golfing pattern, and we'll be approaching this new high of 1630.28, and then it is uncharted waters from there. We had a close, highest close we've had. Closed above 1600 for the first time. You saw it didn't close, now it closed above. Now it needs to get above that 1630, and then you're in great shape to go to the long side. Just need some follow through, but again, no reason to be bearish at all. S&P 500. S&P 500, pretty much the same thing. We definitely need to get above these highs of 1802.33, and then we could continue from there. But you can see there's definitely bullish price action going on right there. The composite. Again, it's sideways in this channel, but it's it's a back above the 10. So again, we see above this line, which is the price. So I had somebody actually comment on one of my thing. Well, you're just showing a bunch of lines. These lines are significant because it's showing the highs and lows of price action. Price action is what we chart in technical analysis. So that's why they're significant, because if you have these two lines and you're going in between them, you basically can get chopped up because you're not having a trend that might be similar to this long line of just going up. Lower highs, these lines mean a lot. Getting sideways action, breaking out above, sideways action, breaking out above, sideways action. We got to see if we're going to break above that. Russell looks good. You have a great strong action. Let's look at the IWM to give us some. Yep. So you have the MACD curl up, and you have a great price action. Just needs to clear above this candle, and I think we can continue to the upside. Okay, I'm not looking to be bearish with anything. One name that does look bearish is Facebook. Put these lines yesterday, didn't adjust them from yesterday, and you can see that it's struggling to get back above the 10 and the 50. So we just have to see, and that volume has definitely waned off in a major way. So we have to see if we can continue, if it's going to continue to go to the downside. And like I said, this line is significant because it's the IPO high regarding price action. So that is a line that you should be very aware of. These lines are representing the downtrend. So I'm not saying this to be, not everybody has the same level of technical analysis. I don't want to make any assumptions, so I'm just explaining it. So that anybody, somebody that's new, somebody that's experienced, might just look at it and say, oh, why are you explaining this? Because we can't make assumption everybody's on the same experience level. And you shouldn't, because that might turn people off. And this is more for educational purposes. So I like it at anybody level. If somebody's very, it could be somebody studying for their certified, market technician exam. These things still apply. So kind of just looking at this bearish MACD and kind of go from there. You have Tesla didn't join the party today, so you got to be aware of that. And if it can break down below these lows, maybe it can continue. This is pretty much this price action right here, this shooting star tail. And you see that once it got into this level once before, it climbed back up. So we'll see if it holds. But right now, without that price level is significant. So you have that 108. Yep. The 50 is at 110 or 111. So you just want to really see what's going on with that. You have Amazon. Amazon looking to break up. It just needs to continue to at least break above these levels right around here and continue to the upside. Price line continues to go up, even though you have small body candles, so just be very aware of that. You have Goldman Sachs giving you a nice engulfing pattern, just needs to get back above these previous highs, this high of 167.32, and then back above 168, and then it is moving to basically get, maybe it can get to this 170 level. Some names also. Citigroup looks good, continues to the upside. That looks good. You can see that it broke this down channel of lower highs. That's what this line is for. And once it broke above that, it came back down and pushing back up. So this one looks good. Just like anything else, you have to really check for earnings. And then there was some names that I tweet out around lunchtime or around mid-afternoon. It's a little later today. Of some names that look good to keep on your watch list, and one of them was actually Disney. Disney looks good. If it can get back above these previous levels, it looks good. Another one that I put on was Expedia. Expedia looks good as well. This looks good price action, sideways, and just needs to have some follow through to the upside. And it could come and definitely, this gap. So we got to see what's going on with this. Let's see if that's going to affect it. Let me see if the weekly. Okay, I just got to see kind of my biggest thing is the risk versus reward, so we just gotta have to see what that goes. And you had ETN as well that looked good. Again, this one looks really good actually. You have nothing but clear skies above, so that's a good looking setup. It just clear these previous highs and can continue to the upside. So that's a good one to look at and go from there. So if you have any questions, you can email me. Let me look at some. You can email me at MaximusAnalysis. You can go on Twitter, MaximusAnalysis. You got YouTube here, of course. So let me know what's going on if you have any comments or questions. Let me look at a couple other names. I just want to see what Chipotle was doing. It's still just sideways. Google still kind of sideways. Hopefully this can definitely, if it can clear above here, but at least up here, and just be aware of that. Solar City as well. That one's still. There's a lot of lines on here. I actually would like to take all this off so I could have a kind of start, and you can see lower highs, right? You can see that, and you can see, prior price action was around here. So once it broke back below that, so what we want to see is that what was once resistance or support, now you see the descending triangle. This is another technical analysis. It's basically showing lower highs, same type of base that was, and then a break above it. So if we can get a flag, which this might be, but if you get some price action lower than this, it can definitely continue to the lower side, maybe fill this gap. So I'm definitely going to look and see what this price action looks like tomorrow, and kind of just go from there. So that's pretty much it. And trade them well. Don't try to predict, just react. So it's not a matter of what you think is undervalued. If it's going down, let the knife stick in the ground first before you attempt to pick it up, because you might end up having bloody hands trying to pick a bottom. Top, that train might have a lot of steam. Why step in front of it? Why don't you just get on board and next stop? So that's kind of, the way I think you should be looking at things versus trying to fight the trend, trying to trade the retracements and stuff like that. And we talked about this stuff. So you can't say that, I didn't say that, listen, this is just a retracement. I even gave percentages of how deep this was, and it didn't really even pierce this didn't even pierce this 10-day moving average. So, why would you want to go short right here, right now? So that's a question that you have to ask yourself, because it can't just be, well, I don't think it's going to go higher. Well, the I is, you might as well say, my ego thinks it wouldn't get any higher, and I want to be right, versus the market is always right. And that's a great lesson that hopefully you learn very, very early, because it will be true no matter what your experience is. Take care.